Welcome back. Well, Cummins is the next corporate on our radar. Remember, the company has seen a bit of contraction in terms of the gross margins, but we will need to understand how are things moving, both on the global business aspect as well as on ground. To understand that and more, we're joined by Mr. Ajay Patil, the Chief Financial Officer at Cummins India. Hi, Mr. Patil. Thanks so much for joining in. Well, I wanted to focus on the European piece first. There's a gas supply issue in Eastern Europe and various other places out there. And the sense you get is maybe Genset's demand is on the rise. Are you experiencing anything in that vicinity? If you could tell us how things looking out there. I think Europe, as a percentage of your exports, is roughly around 20%. Give us a sense on that.
Hi, good morning to you as well as all the viewers, and thank you for having me on the call. Yeah, what we have been saying about our exports is primarily that the exports we make is to all the continents of the world. And Europe, of course, continues to be one of the geography. You did talk about our European sale at a certain percentage. We typically don't give regional numbers with respect to exports. But what I can certainly say is that sequentially what we have been observing is that the exports demand for us has been fairly steady. And that is what we have been observing over the last 2 to 3 quarters. And a lot of it is attributed, broadly speaking, for exports, not specific to Europe, is really the pickup in economic activities across the end markets. Largely what we see is driven by a combination of robust growth in markets like data centers, telecom, as well as to some extent infra. And to an extent, we also see, based on the profile of our exports product, that the private capex in those respective economies is also started to pick up.
Mr. Patil, we get that. Sounding that things are on the mend out there. On a quarterly basis, you can't break up the export number for us geographically, but 500 crores per quarter, that's doable. I think you indicated that last time as well.
What we have been saying is that our endeavor is that we continue to sort of look at exports as an important component of our revenue profile. And I know the analyst and investor community has been, few quarters ago, I remember they asking us when we will do 400 crore a quarter, which we have been doing over the last 2 to 3 quarters consistently. I think the key for us is really to keep sustain the run rate that we have on the exports and find ways to sort of grow it.
Okay, let me switch that question the other way, right? I mean, in FY22, you had about 1,600 crores of revenues in exports. That was a growth of almost 40% compared to FY21. Will you do the same growth rate or better?
Well, I mean, as you would imagine, I mean, our efforts are on to see that we continue to find ways to keep growing year after year. Guidance is harder in today's times simply because we still continue to see some disruptions when it comes to supply chain, primarily the electronic parts. Also, from an end market perspective, while there are good indications that the demand sustenance may be there, hard for us at this point of time to provide a number and give a guidance because we have gone public and said that we are not in a position to give guidance, primarily because of the uncertainty that we see on the supply chain side.
All right. Mr. Patil, at one point of time, the street was hoping that you all merge the unlisted entity, that is CTIL, with the listed entity. Now, suddenly, there are 3 Cummins entities, the listed entity and 2 unlisted as well. Could you tell us, is there any plan of bringing them together, merging all these 3 entities, or do you believe if you're enjoying any kind of synergy benefits, if at all, you'll choose to keep these entities separate itself, a couple of unlisted entities and 1 listed entity?
Yeah, I mean, our model of how we are operating in country is fairly consistent. I think the listed entity is around for a long time. Incidentally, we completed our 60 years in India. And the 2 unlisted entities that we are talking about are into products which are historically are not part of the portfolio of products which were there in the listed entity. And therefore, what we see is that the listed entity and its growth and access for technology for the listed entity, that continues to remain for that listed entity portfolio to continue to grow. And therefore, to that extent, purely from a governance point of view, we maintain a very tight governance between listed and unlisted entities. That's number 1. And number 2, you asked a question with respect to how are we thinking about any potential merger of these entities. I think that is a question which we get asked very often. And what we continue to say is that that's primarily a shareholder's question. And if the shareholders make those decisions, we'll of course be the first to come and inform you about it.
But is there a plan?
I can't comment on that, unfortunately. I'm sorry about that.
No, that's fine. Okay. Let's talk a little bit about the domestic business, because you said in the exports there is some supply challenges that you're facing, because of which you can't give us a number. In the domestic power gen space, what are you looking at in terms of growth? And do you have supply issues there as well, which is restricting your growth?
Certainly, I mean, there are, some supply chain disruptions which are still there. We have been saying this even in our previous conversations, that today we are not able to meet 100% of the demand. Broadly speaking, anything between 10 to 20% of our revenue does get impacted on a quarterly basis. It is not a loss of business, just to clarify. It is just a deferment of revenue simply because of the delays on supply chain side. That's number one. Number two, purely from a demand point of view, what we continue to see is that the end markets, especially when you look at larger end markets for us, be it data center, be it infrastructure, hospitality, rentals, commercial real estate, we continue to see a fairly steady demand. We also see that the pickup from these end markets with respect to the project's completion, that is gathering pace as well. So that gives us a lot of optimism with respect to how we look at the domestic demand. And obviously, as we look into the outer quarters, there is a key milestone coming up in terms of the CPCB 4+ norms, which currently are anticipated to be effective July 1st of 2023. So this is going to be a step change from an industry point of view. And we are ready in terms of meeting those very stringent emission standards, which are prescribed under the new norms.
Okay, all right, Mr. Patil, final question before we let you go. When exports increase, normally you see that the margins start improving. Your gross margins have come in at the lowest level you've seen in the last 5 years or so. So my question to you is, are margins now going to improve from year on, given that things are sorting out? Point number one. And the second factor, please clarify to our viewers, we keep hearing about this buzz about delisting. Any such plan or no plan whatsoever?
I can't comment on the delisting part. I think on the margin side, as all of us know, the effect of commodity inflation that we have seen and the pricing action we have taken, we are looking at ways in which the gap between the two closes, and a lag effect of pricing is what we think will come through in the coming quarters.
Mr. Patil, we'll leave it there today. Thanks a lot for joining us.